Good evening, Nick Gimman from VolumeProfileTrader.com on Saturday, June 30th, last day of June. And I'm just going to jump right in. The S&P had a huge day on Friday. Now, you have to think, you have to keep a few things in mind. One, the EU, or I should say the Euro agreement spurred this rally, and there's no doubt about it. The best way to confirm that is to look at the euro. And you can see the euro has had a very nice bounce, a very nice higher low. Look at the volume. The last time we had that much volume, basically the lows. And now we're seeing a higher low. So really I'd be expecting a test of May's point of control, the swing highs from June, on the euro. It's also the 55 SMA, simple moving average. So just something to keep in mind. But that is what spurred the market higher on Friday. However, you have to look at this market, and we've continued to talk about 1300 to 1320, right? Well, you can see that the market did a pretty good job, other than 3 or 4 days. The market held within that range for 2 months straight, and now we're seeing, we saw our major low, and then we saw a higher low here, and now we're seeing another test of these 1300s, and now a real blast off to the upside. So against this point of control for the year, this is bullish, and it's hard not to get involved to the long side here. One great thing about what has happened is the S&P. Now I'm going to get rid of all these lines. The S&P gave us our buying opportunity, and I think let me first kind of recall. I think the first one was really on Tuesday at the 11 o'clock hour. That was our first. I'm pretty sure I sent out an email saying look for buys, and then using the same setup, and members who have taken the trading course knows this setup is very valid, works quite often, as long as you're patient and trading at support and resistance. But on Thursday, we had a great trade set up, and that led us to a follow through on Friday, which paid off big time. We blasted through, during the end of the day, of course, this high volume area. We held it in the morning. There was really no textbook, support down here. I'm sure I could find something on a daily chart as far as volume profile, but I was just looking at this volume, and only 1 hour we closed below it, and then we pushed higher, higher, higher. Every single hour on Friday was a higher low, and the shorts got squeezed, and they felt the pain for sure. And now we're going to this 1366, 1369 level. Actually, if I recall, I think I have 1363. Let's go 1363 to 1370. That's your next potential resistance level, and it does have the point of control for the last 90 days there, and that needs to be, you need to take note of that. That's important. So that's what I would be looking for on the S&P. 1372 is your max target to the upside for now. That's what you want to see. A nice push up to those levels. That's another 1% or so, and from there you look for some type of retracement, and you definitely look to buy on weakness. That's how this is looking. Now you also have to realize 4th of July week is coming up, and you have to be aware of that. Probably going to see light volume, I would have to assume, and also you have manufacturing index on Monday, and I know the payroll on Friday, and that's your most important piece of economic data. next week. So let's look at some other names. The Dow, look at this is textbook bouncing off point of control for the year. This is what you want to see. This is the buying opportunity that we're waiting for. Remember the buying opportunity back at the lows of October. This looks like 2.0 of that, and I think that you want to be a part of it. NASDAQ, the only thing I'm concerned about with the NASDAQ, well, let's say first and foremost, holding this high volume area, and the top of it isn't too much higher. So the ceiling's pretty low if you're going from a high volume standpoint. The only thing that's concerning about the NASDAQ is the point of control for the year, like the S&P, is not at these current levels. Now I also noticed that this volume back from last July is has an influence on this price, but that's okay. I'm looking at a 1-year chart because that's how I view the market on a larger scale. Okay, just to show you VIX, this 21 level, I'm pretty sure I mentioned it the other day. Big rejection, looks like VIX is trying to head lower. Oil, a huge reversal off of these lows. Basically, I'm just going to classify it as a triple bottom here. Oil was up like 9%, ridiculous, on Friday. Let's show it from this standpoint. Here's our high volume area from oil, and you can see we've been trending on oil to the downside. Now we are going back to May's value area. We're going to test something within that. It's only a matter of time. Be long oil names. I mentioned Chevron. I know I was buying Chevron on the 26th. Now I'm getting, it's paying off pretty nicely. ConocoPhillips, paying off very nicely. These are names that you want to be long because they're going higher. ExxonMobil, I mean, these are bona fide moves to the upside, especially now that oil has found a bottom. Alright, let's go. Well, I guess we'll do this. Gold, big bounce off the lows. Okay, the 154 by 157 call spread that I talked about on the 27th. I need to be honest and say I took most of the position off on the day before, Thursday, because it broke these lows, and that was not my thesis. Was it was going to hold these lows, but I always, not always, but I usually keep a part of the position on, because just in case I want to, what if it changes the next day? Now, I have to say, so I basically made up for some of the losses that I incurred by being long gold, but I took profits on gold. In fact, I'm still long GLD, and I plan to be long GLD for a while. But I also did buy some protection into the close on GLD, just like I did on the spiders, and the reason why is because, sure, the market looks like it's breaking out here, but we also have a huge gap, and we also have a short week with light volume expected. We could either have a light volume melt up, or we could maybe see some type of retracement back to a buying opportunity. I'd be looking at well, I should use the futures. Bear with me. Nope. What I'm looking at is the point of control for the year and the high volume area that surrounds it on S&P futures. Okay, so 1330 or so down to 1317. I really doubt it. Well, I shouldn't say this, but I think if you get down to anywhere near 1330, you definitely start looking for buyers, and you start looking for them on an aggressive note to build positions and build them quickly, because that's what the market looks like it's trying to do. After all, think about those huge fund managers that just use moving averages as a way to be long or short. If it's above the 200, they're long. If it's below, they're at least flat, or they're scaled back. And we held I used the 233 just because it's a Fibonacci number, but we held that, and now we're moving higher, so that needs to be taken account for. We're also above the 50, which needs to be taken account for. So I'm just going to go through the sectors. Financials, pushing up to the value area for the year. Did a great job bouncing off of this high volume area, literally to the lows, held this big volume area, and now is trying to push higher. I'm not even going to go into individual names. Energy, value area low for the year, a double bottom, and now a bounce higher. That's what you want to see. Try not to catch a falling knife, basically on these lows. But if you get a double bottom like we do here, there's your opportunity. Wait for a retest and, go for it. On the October lows, and this would be an example. Look at the huge bar you get on these lows. You get a huge engulfment. That is a little bit different than this lower volatility, price action, basically, is what I'm trying to get to. All right, industrials. I need to say this. I basically downplayed industrials because I just didn't like the chart. I didn't like how the volume looked here, but at the same time, it held up pretty well. I mean, look at the industrials versus energy. Energy down at value area low for the year. Industrials got close, but really held to 233, the middle of the range, and went on from there. Just looking at, let's see, 38, 27. So your mid range is 33, about 33, because this was 27, 67. So basically, you had a 50% retracement, and now we're moving higher. I sent out an email saying, look at Caterpillar, look at Deere. Deere, definitely the better setup, just because of what it's looking like. And obviously you're seeing the follow through. Great volume right here. You can see point of control for the year. We break below it, we start to bounce in it, and then we get to move higher. That's what you want to see, and then you want to use smaller time frames to get into the positions, okay? This is pretty easy stuff, especially once the market gets going. We've been in chop for a while, so it's been pretty difficult. There haven't been a lot of opportunities. Most opportunities have been intraday. You've had to, if you've been, swing trading, you've had to balance your books by, hedging up and having exposure to the other side of the market so you're not getting clobbered. But now we're starting, we see follow through to the upside, and that's what you want. Utilities, this looks like it's going to try to go higher. I still, this is something that you can look to be a part of, but I think you want to go for the outperformance here, higher beta names. Technology looks good. Of course, I'm going to pull up Apple because that's necessary. Apple, let me bring up the hourly chart. Apple held, all right, this is a great example. Let me zoom in a little more. All right, last month's, too much. Last month's point of control, let's see, 567. Where did we hold all of this month? 567, 567, 567. Oh, dips a little below, but members know. What does this bar look like right here? Oh, okay. So, against support, what a great entry. Now you're seeing follow through. So let's go on and see what we have. XME, giving you a bounce. Let me zoom out a little more, just see a bigger chart. I still am a little shy of this one. You're probably going to, just like anything, it's going to bounce with any broad market rally. But is this where you want to be overweight? No. Just to show you. something like Freeport. It looks like you have a double bottom right here. You know, maybe even call it a triple bottom. I don't know. But the point is, you're building a base. You know, this volume right here at 37.75 to 39.75, $2 range. I mean, that just looks like a magnet, and I'd be surprised to see Freeport not get up to those levels. Of course, I could be wrong. Been wrong before, will be wrong again. Silver, bouncing off of these major lows. You know, whether we made new lows for the year on silver, but I would have to guess that we're going to get a bounce. I don't know how high. I own some silver leaps, both calls and call spreads, and I don't care if they expire worthless because I think there's a good chance that we'll see some type of appreciation in silver and gold still. Dollar, big sell-off. I think we talked about this. Actually, I think I talked about it the night before Europe came out with that news, saying there wasn't really a real reason to sell. I probably mentioned something about the point of control. But this is showing you, you know, we're back down at these lows. If the dollar breaks 81.40, watch out. We're going back down to this high volume area with a main target of 79.25. Okay, that means market in rally mode. Remember, it's a presidential election. You need to keep that in mind too. Let's keep going. Okay, retail, another name I like. Remember, oil down big. Retail probably going to get a boost. Consumer discretionary types names. Starbucks, you know, stabilizing. I'm just pulling this up because I'm curious. Come on. Target looks good. Point of control for the month, a lot of stabilization there. Now we're pushing off point of control for the month and also value area low. But we're trying to push off of those levels. Let's see, Walmart, new highs, new 52-week highs for Walmart. Let's go back. You know, look at how this originally set up. Big high volume area formed, and then you saw from those levels, from earnings, a blast off to the upside. So, you know, be aware of that. And when it doesn't come down, let's see how many days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days where we continue to make higher intraday lows. I guess higher highs too. And then we stabilized, barely made new lows, and then continued higher. You need to be aware of that. And if this is one of your names on your watch list, be aware of that. And you know, remember, you're here to make money. You're not here to be right. So wait for your opportunities and pounce on them. Okay, I changed my mind. I'm going back to banks, and it's because the XLF, I don't think it gives a good enough display. So let me go through some of the main banks and show you what's going on. It looks like we could have a pretty big move led by the banks. And so let's go into that because that's important. Citigroup, point of control for the year at these lows. We're trading at these lows. If you want to take a cheap shot, here it is. You have to take a little bit of risk on, but I would be looking at this swing low from the 28th and having your stop below there. But this could be one of those names, you know, let's say the euro is being saved for now. You could have a move from this 27, 28 range back up to 38. Just from volume profile, that looks like a possibility. It also looks like a possibility 31 is your next target to the upside. Just looking at high volume, that's including a lot of old volume too, so be aware of that. Bank of America, we've been trading along. 7 was the point of control. Now, I think it was. Now we're trying to blast through that. If we get above this $8.30 range, we should go retest this $10 level. That's just what it looks like right now. It looks like this could be one big rejection, and we could see a follow through to the upside. I have to see more price action, but everything, the way the S&P looks, the way these individual bank looks, that's just what it kind of looks like. Wells Fargo pulls back to this high volume area, and that's all she wrote. She gave you one opportunity on the 12th of June to buy back in those lows if you didn't buy this big pullback. And you've seen higher prices on Wells Fargo since. This looks like it's going to make new highs. That's just what it looks like it's going to do. Goldman Sachs, I'm not really concerned about this one. However, kind of looks like Citigroup. You have huge volume down here at 96 to 92.50 or so, 92.60. If we do any more damage down here in the 94 level, you're looking at 115 for a target. What happened every time price was down in this 96 range or so on Goldman Sachs? A move up to 115, a failure, but still a decent move, and then a move to 127 or so. I'm just kind of looking. So I would expect a move up to 115 on something like Goldman Sachs. Although if you're looking for outperformance, it looks like a Bank of America, a Wells Fargo is your choice. With JP Morgan, something you want to stay away from. Maybe the 32, 34 range is where you want to be a buyer. That's where the heavy volume is. It rejected off of those levels, but I don't think that's where you want to put your money if you want to do financials. Bank of New York, this looks like it's breaking out. Look at the point of control for the year, 2065 or so. We're seeing rejection off of that right here, right now. Be aware of that. USB, looks like it's going to go make new highs. We had one pullback, and that was all she wrote. Now it looks, off to the races. Now with that said, I don't think that you need to chase, USB when it's right at, these highs. I think you want to be aware of the point of control for the year and try to be a buyer somewhere in that range. GE, this is going to make new highs, but you can see it's the same thing. You have this high volume area that forms, you balance, you build volume, you build value, and then value is eventually rejected. That's the way it goes. That value being rejected is trend. Trend is where you make the easy money. Realize this is the part of a trend. The start, excuse me. I have to say one thing. Costco, remember I mentioned it back in May. Yeah, that was a nice trade. But look, it's based off of high volume. That's all it is. A nice pullback within an uptrend where the 233 has been the place to be buying. And there we have it again. You have to commit to these levels. What I'm doing is I'm just looking through S&P 100. Cisco looks bottom. I mean, everything looks bottomish. CVS, new highs. Chevron, I'm long. I tried to get long Dell, and I got stopped, but that's moving higher. Disney, 52-week highs. Dow Chemical looks pretty good. We have a little double bottom here. This is, decent opportunity. I'm not personally getting in it. EMC, huge day, 8% off of this trend line, and a continuation to the upside. Emerson, value area low, buy it. ETR, energy. This looks like it, after this downtrend, it's trying to reverse. Light volume, though, so be careful there. I don't know anything about this company. No. Ford, no. Freeport, it's too extended for me. FedEx, low oil prices. Usually that's a recipe for, buy transports. Just to show you, look how great of a job it did to hold its point of control and then move higher. That's what you want to see. Let's see, General Dynamics looks pretty good. Double bottom, point of control for the year. Probably has room to run. GE, new highs. That's not what I'm interested in. Google, holding these lows. Looks good. I mean, everything looks good. Goldman already looked at. Halliburton, no. Home Depot, this is value migrating higher. Point of control for the year. I think you can buy with a stop under 50 half, which is $2.50. Looking for Heinz. This looks like it's breaking out. I mean, this is a slow mover, but point of control. This is a breakout. Honeywell double bottom. Hewlett Packard probably value buy. IBM. Oh my gosh, off the 233. This is, I mean, any more action. Let's put it this way: any dip in below 194, buy it. Okay, buy it now. 195. Just buy it. This is going higher. What happened the last time we had a double bottom on IBM at the 233? A huge move to the upside. Okay, lost it. There we go. Intel looks like it's moving higher. Johnson & Johnson, new highs. JP, no. Kraft, probably moving higher. Double bottom. Waiting for the 233 to catch up. Last time it was there, we saw a nice explosion to the upside. Value has migrated higher. How do I know that? Point of control for the years here, moving higher. Coca-Cola, new highs. Lockheed Martin, breaking off the 233. Lowe's, breaking off the point of control for the year. Buy them. MasterCard. McDonald's, pretty weak off of Ford's weak Europe report. Medtronics, breaking out. This is a buy right here. Breakout. Stop goes under 38. You have 3% risk. MetLife, no. 3M looks like it's trying to break out. You have potential highs here, but you want to see good breakout volume. We're seeing that. I don't know how else to say it, but look at all these names turning around. Monsanto. Remember when I said to buy it? We'll wait for a pullback, but try to buy it 73 half. Now it's $10 higher. Merck, new highs. Morgan Stanley looks good for bottoming. I don't know what else to say. Actually, Nike was a pretty good trade Friday. No, I don't care. Norfolk Transportation, pretty light volume, but trying to break out. So Oracle, look at that, 5% to the upside. Value area low for the year. I mean, look at this. This is telling you, actually, I think Oracle's in a pretty decent pattern right now. Bigger time frame stuff. Didn't want 2 day, just wanted 2 year 1 day. You have these highs, and then you have these lows, big triangles, excuse me, and longer term, anything below 29 should be bought on Oracle with a stop around 25. That's a lot of, that is a lot of risk, but if you cost basis your way in, we should see 36 or so again on Oracle. Occidental Petroleum, huge flush on volume, and now you see stabilization. Point of control for the years down here, that's what you want to see. Pepsi, new highs. Pfizer, I think this is close to new highs. Procter & Gamble, this is just value, buy it. Qualcomm, buy it. Look to buy this. This is, point of control for the year. It's trying to bottom. Raytheon, new highs. Sprint, am I making my point here? AT&T, stay away from. Time Warner, breaking out. Texas Instrument, value area low for the year, buy it. United Health, healthcare law, whatever. Union Pacific, this is breaking out. It's definitely the place you want to be for transports. UPS breaking out, or gonna break out. United Technology, buy it off of this support. And so that's about all I'm going to do. Visa, that's going to make new highs. All these are going to make new highs because the market's going to move higher. So, looks pretty good, and I'd have no idea what else to say. Hope you were buying when I was mentioning start scaling in, because, when the market starts to move higher, it's a lot easier to buy when you're already involved. So, anyways, take care, have a good weekend, and I will talk to you Monday.